Hey everyone, welcome to the Trendline Invest channel. A lot of you have been showing a lot of support for me on my YouTube channel for quite some time. Especially there are a few people who have been appreciating me for each and every of my video, and also a lot of people have been buying me a coffee, spending a few dollars or rupees on my buy me a coffee platform and showing me support as well. And especially on Twitter, there's been a lot of positive comments. So thank you for all of your support for all these days. It's been a very great journey, and I hope I can continue to educate all of you on my Twitter, on my YouTube videos as well. Okay, so that's a small gratitude from my side, and do let me know if you've been enjoying my journey in the comments. But today I have a very special video, especially if you're looking for, how do you buy or how do you spot stocks which can be potential multi-baggers, or how do you uncover exceptional winners based on a strategy by Stan Weinstein. Now, if you don't know Stan Weinstein, do refer to his books. He's a legendary trader who literally changed the way of trading, of how people do invest in stocks, and he made investing really simple for a lot of people across the world. So I'm going to take one of his strategies today, and I'm going to show you how you can spot multi-baggers, or what are those patterns in technical analysis that you have to look at if a stock were to be a multi-bagger. Okay, so let's get started. So it's called the triple confirmation pattern by Stan Weinstein, and it's a very simple strategy. All you have to do is follow 3 rules, and you can probably have a potential multi-bagger, or you lose a very small amount of money of your capital. Okay, let's get started with this. So the first thing is, on your chart, you have to plot the 30-week EMA. Now you have to open the weekly charts on TradingView. You'll see something like this. After the symbol, you'll see something like 1W, which indicates the weekly chart, and you have to add the 30-week EMA or the 30-week exponential moving average to the weekly chart. Now you can use a simple moving average, you can use a weekly weighted moving average or exponential moving average. Whatever you use, it doesn't matter. There'll not be a major change in terms of the average itself, because you're looking at a 30 weeks. So all you have to do is plot any moving average, but 30-week moving average. Now again, you can also plot 40 or 50. It's totally up to you. But all I'm saying is you have to at least have a moving average which is more than 6 months. Right now, in this case, I'm using 30-week because Stan Weinstein in his book uses a 30-week moving average, right? So this black line over here is a 30-week moving average. Now, the rule is simple. If the price is above a 13-week moving average, then we say that the price is bullish. If the price is below the 30-week moving average, then we say the price is bearish, right? It's that simple. But that doesn't mean you go and buy the stock if the price is above the moving average. So we do not buy it yet. Okay. Now this is the first thing you have to keep in mind. A 30-week moving average needs to be plotted, and the price needs to be above the 30-week moving average. Okay. Now this EMA is just to identify the trend changes. If the EMA is trending up and if the price is above the moving average, then the price is bullish, else bearish. Okay. Now let's move on. Now, the second thing you have to do is you have to identify a base, right? So that's the second thing. You have to identify a base. Now, what do I mean by a base? A base is nothing but after a stock is moving in a downtrend, you will find something like this. A base is nothing but if the price is probably laying a solid foundation. Now you could take this as equivalent to a foundation of a house that we build. You need to have a very strong foundation. Now that means you need to have multiple touch points at a particular price point. Now usually Stan Weinstein refers to inverted head and shoulders pattern, like the pattern that you see here, or he refers to rectangle consolidation. So price rectangle consolidation is exactly like a rectangle, right? Now any kind of pattern, but all you have to do is, in order to find if the base is formed and if the price is breaking out, you need to plot the pivots high low indicator. Now in TradingView, you can just search for pivots high low, you'll find indicator, you can plot that, and then you will see something like this, right? You'll see these numbers plotted, and these numbers will be going down if the stock is in a downtrend. Right now, if you see, this number has been completely in downtrend, right? And then after this 513.65, the price then crosses this number and the price now closes above. Now, whenever the price closes above the pivot on the weekly charts, that's when we say the base formation is complete, right? Now, base formation is nothing but this consolidation. Basically, the price has been going down, and now the price has just been going sideways, right? So it went sideways, came down, then it went sideways here again. And then we had a strong breakout. That is the second rule. The price needs to have a very strong base, basically, or the price needs to cross the previous pivot. You can keep it that simple, right? Now, the next rule is we need to have a very strong volume surge in that week when the price broke out from this base. Okay, so the week the price broke out, you need to have a very strong volume. Now, this is a compulsory rule in this strategy, in this triple confirmation pattern. The volume should be at least twice, 2 times greater than the last 4 weeks average. Now, let's say the last 4 weeks, if you see here, the average would have been somewhere around that point. And now we had at least more than 3-4 times increase, right? So the volume should be at least twice the average of the last 4 weeks. Right, you can look at this visually and you can identify if the volume is higher or lower. Okay, that's completely, you can just do it manually, or simple math is fine. Now, the next rule is the price should have been up 40 to 50% from the base, right? So before breakout, the price should have already moved up at least 40 to 50%. Right, now, this is also a compulsory rule in this strategy. Now, here in this case, we see the price was around 240 levels. And when it broke out, it was around 500 levels. So which means the price is definitely moved 50% at least. In this case, it was 100%. Now that is also a very, very important rule. Price should have moved up at least 40 to 50%. Now the last rule in this strategy is the relative strength should cross above the 52-week moving average of the relative strength of the stock. Now, if you don't know what this is, relative strength, there's another video I've made of relative strength. Just check my channel and you'll find this, or go to my Twitter pin tweet and you will find this. Okay, so here, if you see this, basically the black line is the relative strength, which is nothing but the stock price divided by Nifty or CNX 500 or the benchmark that you choose. And the green line is the 52-week moving average of that black line, right? I'm just smoothing the curve or the changes so that we have a better perspective of the trend, right? So in this case, the relative strength should cross above the 52-week moving average of the stock's relative strength. Okay, so that's the final rule. I'll repeat again. The stock has to be above the 30-week moving average. So that's the first rule. Second rule is the stock has to cross above the previous pivot point, or the stock has to break out from a strong base. You can apply anything. The third rule is volume should be at least twice the average volumes of the last 4 weeks. The next rule is the price should be at least up 40 to 50% from the lows before the base breakout. And the last rule is relative strength should cross above 52-week moving average of the relative strength of the stock. Okay, so these are the 4 rules. I'll just repeat this. You can see the summary here, neat summary that I've written here. Now, one thing I want you to note is this strategy is not applicable for swing trading or short-term trading. It is only applicable for investing or positional trading, right? Because this is, you're looking for long moves and the stock might have already been up 10-20% here. So you might have a deeper stop loss. So you cannot apply the strategy for swing trading. So that disclaimer is something I want to tell you. Now, I want to discuss here a live example so that it makes more sense for you and you know, okay, this is probably how you have to pick stocks. Okay, so again, I covered this stock last week, Career Point, in my last week Sunday video. So this is how the rules are here. The stock is above the 30-week moving average here, which is the first rule. The second rule is the stock has to break out from a strong base or cross the previous pivot point. Yes, it did cross the previous pivot point here and it broke out from a brace here. Now, remember this structure and Career Point was a rectangle breakout, unlike the previous one. So here that rectangle is this one and this one. So I have cut part of the chart before, but it's a nice, beautiful, long 13-year, I think 10-year long rectangle breakout. Yeah, 13-year breakout here. And then the next rule is we had to have a massive volume here. In this case, it's definitely twice more than the average of last 4 weeks here. And then the other rule was relative strength should be greater than the 52-week moving average, or in this chart, the black line needs to be above the green line and it has to be really, really up, not just kissing the red line, but it has to be way above the green line. So these are the rules that we looked at, and I hope this video made sense to you. The strategy made sense to you. If you did like this video, do let me know in the comments. And also if you have any doubts, do let me know on Twitter or on YouTube as well. Right? So don't forget to subscribe to my channel and don't forget to share this beautiful strategy with your friends and let them know also that you're learning technical analysis from Trendline Investor. Okay, so I'm going to leave you here. Take care, stay safe, trade safe. Until I see you in another video. Bye-bye.